Hey guys, this is Chris from the Hidden Reserve, and in today's video I want to be talking about idle cash, specifically for you business owners out there that have money just sitting in the bank that you don't necessarily need to access anytime soon. So I just want to dive right into things and define what is idle cash. So I'm not talking about like money that you actively are using for expenses and even your emergency fund. I'm not referring to that. What I'm referring to is money that is in an account, whether it's a checking account, savings account, that you know you're not going to need anytime soon. So again, you have your money that you need for daily operations, your day-to-day monthly expenses in a checking account. Let's say you have a savings account with your emergency fund, and then you have another account with more cash that's well above your emergency fund that you know you're not going to have to access anytime soon. That's the money I'm talking about. And why I'm making this video is because so many business owners have too much cash on hand that's just unnecessary, and those dollars can be repositioned elsewhere to be, one, earning more for you, but also give you multiple uses for that money. And again, it's like you're not planning to use it anyway anytime soon. So it's like, what else out there can give you a higher return, give you the same liquidity factor? Like if you do need to access it, you have that the ability to do that, the same type of liquidity, and then also something that gives you a bit more protection. So that's what we're going to be diving into today. Number one, the first thing I want to cover is, again, we're clarifying what this money is. Very simply, idle dollars are dollars well above your emergency fund, okay? Second thing is that I want to cover is like, where are we actually putting these dollars? Like and you don't have to do, I'm not saying take all of your idle cash and move it over to what we're about to discuss, but a portion of that money even is definitely something to look into. So what I'm referring to is it's a safe private contract with an insurance carrier, okay? With these contracts, if they're set up properly, you have the ability to earn 3-4% IRR. So after taxes, or tax-free if you want to look at it like that, you're going to be getting anywhere from 3 to 4%. I mean, that competes with a lot of bank accounts, especially high yield accounts, and that's on a net basis. I'm not talking you're getting a 4% return in your high yield savings, but also you got to pay interest on that money regardless if you're planning to use it again. And remember, this is money that you weren't planning to use anytime soon. So why, to me, it just doesn't make sense to have all of your surplus cash in an environment where you're going to be getting taxed on it every single year via 1099, and you're not even planning on using it anytime soon. You just like the fact that you have, whether it's returned earnings or just whatever cash sitting in a bank account liquid, God forbid you do need to access it. Or maybe there's just a grand opportunity that pops up and you want to use that cash. Well, there's a better way to store that money and grow it with time, and also ensure that you pay less taxes on it and have more protection over that money. Okay, so that's the first thing, is like you get 3 to 4% on your money in these private contracts when they're set up the right way. And another thing too is the creditor protection on these contracts. And that's something, business owners, we don't think about is, what if we were to get sued? What happens to the money in our accounts? Well, it could go away. And with these private contracts, most states you get creditor protection. Meaning that if I had $100,000 in this contract, that $100,000 is protected against lawsuits and judgments. Again, it's different from state to state on how much, but that's something that you get with these contracts, is you get a whole nother layer of protection there, and it's just another, added peace of mind, if you will. So that's important. And then the other last point I want to talk about with these contracts is you also, because it's life insurance, you get a death benefit attached to these contracts as well. So imagine you have, just for simplicity, let's say it's the amount you decide I want to reallocate or reposition into one of these contracts is $100,000. Okay, and I'm not saying like that's all the money you have in this separate account, move it over. Just for the example, let's say it's $100,000. Well, when you put that 100 grand into this contract, you're going to get more leverage on that money via a death benefit. Just for simplicity, these aren't accurate numbers. I'm just using it for an example. Is if you moved $100,000 in that contract, you might have $500,000 worth of death benefit. So when you pass away, there's going to be, more money passed on than if you just left that money sitting in a bank account. And on top of that, that money that gets passed via the death benefit, it's income tax free, which is huge. And it bypasses probate court, another big thing that we don't often think about. And with all that being said, you still will have liquidity like your bank account. If you need to access that $100,000 or whatever the amount is, you have the ability to do so. There's no 59.5 penalty like most traditional retirement accounts. You're not going to get whacked if you don't take money from that account. Like there's no RMDs with that either. So that's just something to just really think about, is like, is your idle cash truly in the best spot for you? And especially looking at a long-term perspective, when you add up how much in taxes via the interest that you're going to be paying on that idle cash versus another account where you're going to earn more than an idle account and you're not going to have to pay taxes on it and you still have access to it. So that's something, that was really the last thing I wanted to cover on this type of contract, is it gives you a lot of different benefits that you do not have with a traditional checking savings account, okay? The next thing I want to cover, and this is so powerful with these contracts, is you have the ability to earn interest on the same dollar twice or in two different spots. And I'm going to break that down for you guys. So when you have money in a bank account, $100,000, we'll use that as the example again. If there's a piece of machinery you need to buy for your business, or let's say you want to put money into advertising, marketing, you want to buy Facebook ads, you want to invest money in the Facebook ads to expand your business, and you want to make a $50,000 investment, okay? If you go to that $100,000 in your bank account, take the $50,000, and let's say you're earning 4% in that bank account, well, when you withdraw that $50,000 to invest into marketing, now you only have $50,000 left in your bank account earning that 4% on it, okay? With these private contracts, the same $100,000 in that policy or in the contract earning 4%, 3%, 4%, let's say. If you want to use $50,000 to go invest in the marketing, what you can do with these contracts is you can borrow against the value in it. So you're essentially putting up your cash value, they call it, as collateral, and the insurance carrier that contract's with will give you a loan against it. So if I got $100,000 in there earning 3-4%, let's just say 4% to keep it apples to apples with the bank account, $100,000 at 4%, I request a loan against it for $50,000. The insurance carrier is going to wire that money to my bank account, and now I've got $50,000 that I can use to invest in the marketing. Meanwhile, my full $100,000 that I have in my contract is still earning interest on it. So I didn't deplete the value I didn't deplete the dollars rather that was earning that amount of interest on it. The bucket of money, I have the same bucket of money earning that interest rate versus the bank account example where it's like, well, if I need $50,000 from my bank account, I got to withdraw $50,000 and my principal, if you will, my account balance shrunk, and now I'm earning 4% on a less amount of money. And that's so powerful to grasp and understand, is that there are ways to where you can retain more money and keep more dollars ultimately to yourself by using a contract like this, especially if it's something you were already going to spend money on anyway. And especially if it's an investment where you're obviously expecting to make money. That's where it's really, really powerful. So for you business owners out there, if you're constantly financing things through whether it's bank loans or even paying in cash, just know there's a third option out there that could really help you out, which is using a private insurance contract. And not all of them are equal. They have to be set up a very certain way. Specific carriers are better than others. But assuming all that's taken care of, like, this is a very powerful tool that can enhance your business and give you more options, more flexibility, and just ultimately give your business a better foundation to work off of. Okay? So that was the second thing I wanted to cover, is earning interest or earning money on the same dollar twice. Next thing I want to go over is the proven stability with these contracts. These contracts with some of the carriers they're with, they've been around for 100, some almost 200 years. Like, there's one I'm thinking of, they've been around for 178 years, like forever. And these are some of the strongest financial institutions on the planet. And if you look back to major economic crises, these institutions have weathered all of them. They've been consistently profitable through all of them. And the ones I'm referring to, they're mutual companies, so they pay out a dividend to their policyholders. And these carriers that I'm referring to have paid a dividend every single year, most of them, every single year consecutively since they've been in business. And again, lots of them have been around 100 plus years, some close to 200, since the 1800s, a long time. And if you have money that's just sitting, especially if it's large amounts, you got 100, 500, just a lot of cash liquid in a bank account that you're not even planning on using anytime soon, like, that's kind of, not only are you above like the FDIC insured amount, it's just scary knowing that the bank institution or institutions you're holding that cash with, they don't even have your money. They're lending it out 10 times over to someone else. And if you try to go get that money, go into the bank, try to get 100 grand, have fun. I mean, it's not, and I'm sure you know this, but it's just not a simple process because they don't have the money. Like, I was talking to a gentleman off topic, but he wanted 20 grand to buy a car off Facebook Marketplace cash. Went to the bank, requested 20 grand. He couldn't even get 20 grand. They're like, yeah, we don't have the money. We got to order it. Come back in next week. It's like, to me, that just boggles my mind that you can't even get 20 grand. Obviously, that's not the case all the time. But for this guy, he couldn't even get 20 grand to buy a car. Like, to me, that's ridiculous. And it's just scary knowing that these institutions, these bank institutions, like, they don't even have your money. You put in $1, they lend out 10. Like, how does that make any sense? With these financial institutions I'm referring to, these big insurance companies, they have to have reserves. They have to meet the obligations of the policyholders. For every dollar you put into an insurance company, they have roughly 3 times as much, or $3 on hand. So they actually have money. These insurance carriers, these institutions, they're actually the banks. Because if you ask the average person on the street, like, who do you think, without saying the name, like, would you think option A or option B is a bank? The one that where you try to get the money, they don't have it, and they're lending, for every dollar that you put in, they're lending 10 times as much out, versus the institution that has, for every dollar you put in, they have at least $3 on hand. Which one would you say is the bank? I mean, they're going to pick the second option, and it's an insurance carrier, which is crazy. And then a layer deeper is when you look at how much life insurance the top banks in the United States have, it's tens of billions. And you have to question why. And the reason is it's a safe place to store capital. It's not correlated to the markets. It has the track record and the stability and the strength of, hey, if you put money into these contracts with these carriers, I mean, it's a pretty safe bet that that money is going to be okay. You're going to earn a guaranteed rate of return on it, and it's going to weather whatever economic storm came. Because if you're with an institution that survived Civil War, Spanish flu, World War I, World War II, COVID, 2008, it's like the proof is kind of in the pudding there. And I went on this long tangent because this is so important to know how important, or so important to know, just where are you keeping your capital? And is it as safe as you really think it is? And just being aware, like using private insurance contracts is an alternative to some of your capital, to protect it, to grow it at a guaranteed rate, to ensure it's not tied to the markets, to grow it tax deferred and access the money tax free, and ultimately strengthen your business. Like very, very powerful. And lastly, what I want to talk about is just for you Christians out there, really just the biblical tie-in to all of this. In Proverbs 13:22, a good person leaves an inheritance to their children's children. A little bit off topic, but with these private contracts, especially if it's idle cash that you don't need, if it's within your business or personally, let's say we'll start with your business first. You can have, just by repositioning this money or some of it to a contract, you automatically get that death benefit. So let's say, God forbid, something happens to you and you pass away, you can elect your company to be the beneficiary of that policy. So your company is going to receive an income tax-free windfall lump sum of money that can help keep the company afloat when you pass away, or if you do pass away during the time of the contract. So that's something too. And again, it's finding more use cases for that idle money just sitting, rotting in your bank account. Okay, I gotta make that very clear. Like that's the type of money, that's the bucket of money we're talking about. So just imagine even taking a fraction of that and repositioning it, and now you know, okay, I have access to that cash. And on top of that, God forbid something happens to me, income tax-free death benefit's gonna go to my business. Like that is huge, and it's very powerful. And then take the same scenario with your family. If it's idle cash in some other savings account personally, and we apply the same principles here, again, you're gonna have a death benefit on that policy, and you can have that money left to your kids, grandkids, spouse, church, ministry, other charitable organizations. It's another way to pass down money, income tax-free. And oh yeah, I left out a part, the probate part. It doesn't get tied up in the probate court. So it's a seamless, smooth process for your family, your business, whoever, to actually receive those funds. So I hope you really enjoyed this video. It's something that's just not really talked about. And again, we're giving your idle dollars more use cases and ultimately making those dollars more effective than just sitting in a bank account, earning that interest, but having to pay taxes on that interest, regardless, given the fact you're not touching it, and then having the exposure, the risk to the actual bank itself. Thank you guys for watching. I hope you got value from today's video. If you're new to my channel, if you go to my description, you're gonna see a link to book a call. If you wanna talk more on this, I'd be happy to talk with you. You can do that. And also something brand new to everyone is if you go to my description, you'll see the legacy blueprint. If you fill out a quick survey, if you fill it out, I'll build you a custom financial roadmap that's gonna show you exactly what strategies can help you get to your either retirement goals or just overall financial goals. All you gotta do is fill out a quick survey, and within 72 hours, I will build that plan, I'll send it over to you, and on top of that, I'll make a little video that goes over the plan for you. And here's the kicker. If you do not find through that blueprint, if you do not see a clear path to either reduce your taxes or increase guaranteed income, I will donate $100 to the ministry of your choice. No questions asked. Whatever ministry you want, I will donate. You want to give that money to, I will donate $100 to that ministry. Okay? That's how important this is to me, and that's how much I know I'll be able to at least point you in the right direction with all of this. So that's all in the description below. And again, if you enjoyed the content, subscribe, share the video. If you have any questions at all, you can comment below, or you can reach out to me on Instagram. That's another great way to stay in touch. My Instagram is @thehiddenreserve, @thehiddenreserve. So follow me there, message me there. And again, hope you guys enjoyed. I'll catch you in the next video. God bless.